Good morning, Market Chameleons. Everyone joining us for the first time, please take a look at the disclaimer and be aware that neither Market Chameleon, Dimitri, or myself are registered investment advisors or a broker dealer. If you are searching for investment advice, please reach out to a licensed professional. This show is for informational purposes only concerning Market Chameleon tools and products. With that, D, you ready to roll?
Yep. Good morning, everyone. And I'm going to share my screen here. While I do that, if you're joining us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. If you have a question, type it into that live chat on YouTube. Will's keeping an eye on it. He'll let me know and read it back to me. And to give you a couple minutes to put those questions in, we will start out looking at our pre-market report to see what type of insights we could get on the pre-market trading, and then we're going to move on to our questions. All right, so pre-market report. Up here, you see this calendar view, and you also get some summary stats of what happened in the pre-market hours on those particular dates. The idea there is to compare the most recent pre-market trading activity to the history to see if you could spot something unusual or trend. So let's review today's activity, August 12th over here. We see 522 stocks are trading higher in the pre-market, 275 stocks trading lower. We have 234 million shares trading on up volume, 35 million shares trading on down volume, and we have $2.4 billion worth of stock trading higher, $465 million worth of stock trading lower. And from that perspective, it indicates that trading in a pre-market hours so far has a bullish lean. Let's look at it from a couple more perspectives, and then we will move on to our questions. I'm going to slide down the page, and now we get this more granular view of what's going on in pre-market hours. We see stock symbols, price changes, volume. We also have our most active stocks, biggest percentage gainers, biggest percentage decliners. And I see 68 stocks made it onto our biggest percentage gainers list, 43 made it onto our biggest decliners list. So that also indicates a slightly more bullish bias in the pre-market trading from this perspective. Now, to make it onto this list, we have thresholds in place because the stocks in pre-market hours can trade with very low liquidity, low volume, and if it meets our thresholds, it can make it onto this list, and that will include small cap stocks. It could include ETFs, closed-end funds. It could be a leveraged ETF. It could even be an inverse ETF that moves in opposite direction of its underlying. And to narrow down this group of stocks further, we could use our filters above. Here we have this filter in my watch list, and this allows you to screen this particular report by stocks that you saved in your watch list. If you track a group of stocks that you saved, you can use this filter to screen this report. We're going to use this filter in ETF for our example to show you that this is a similar idea. If you click on it, you're going to get these different ETFs to choose from. Let's go ahead and select SPY. And when we do that, the list below, you could see got filtered by stocks that are holdings in the SPY ETF, which are the S&P 500 constituents. So the idea there is I had a watch list that tracked S&P 500 stocks. I just screened those out to narrow down my analysis to that group. Now, here we see there were 6 stocks that made it onto our biggest percentage gainers list, 2 on our decliners. So also slightly bullish from that perspective, but nothing too overwhelming to one side or the other. Well, we gave it a couple minutes. If you have a question, I'll take it now.
We had a question from Sam Ortiz. He was asking, hello, the feature breakdown for the open interest on the option menu is not available. I'm not exactly sure what he meant. I asked for more information. Nothing came back. I don't know if you want to
Yeah.
just walk through open interest of a particular
Um,
stock, maybe it triggers something.
I think, let me try to go to Amazon. I
Let me
think,
put on a screen another disclaimer real quick just before we get started.
yeah, so, yeah, let me just take grab.
All right, you can take over.
So I think the question was, there was a feature or report we had that used to be called breakdown, which was a breakdown of the option trading activity. So we just renamed it activity over here. So it's under options activity. And when you come here, you get a couple different reports. One is just a summary report and kind of break it down: volume, open interest, liquidity. And in this report here, we might as well just go over what this is showing. Is that it looks at the option volume, option trading, and analyzes it from a couple different perspectives. Uh, gives you summary statistics, and then it gives you summary statistics by the different expirations available. So at the top, we kind of get a breakdown. How did people use options? In this case, I chose Amazon as our example. Let me close this menu to widen out the screen. And in Amazon, this is Friday's activity. We're not open today yet. This is still before the market opens, so we're looking at Friday's activity, and it gives us some insights how people used options in Amazon. So we could see here that you could trade options like just buying or selling a call or put. You could also trade options by entering in a multi-leg trade, like a call, spread, butterfly. If you enter it in as a complex order, it will get tagged as a multi-leg trade. And there are also some contingent trades that are tied to usually stock, right? Like a buy rate, but it's a trade that's tied to something else, other than another option leg. So here we see 78% of all the options volume were reported as a single leg option trade. In other words, a call or put that traded in Amazon. That's how it gets reported on the OPR feed. 20% of the volume were part of a complex order, multi-leg trade. Could have been a call spread, a put spread, a butterfly, and different combinations. You could enter in 5-leg spread or whatever. But 20% of the volume involved a multi-leg trade, 1% was contingent. And then here we break it down further. Well, out of all the single leg trades, 67% of them were in the calls, 33% in the puts. All the multi-leg trades, 67% were in the calls, 33% in the puts. And the contingent trades involved 7% call options and 93% puts. So this gives us a quick view of how people were using options, and users were using options on Friday from this perspective. And then we have this chart to the right of it. And this gives us a general idea. Well, there are two ways that options transactions right now could get executed. One is electronic, So an electronic order is something that you guys probably, most of you use, maybe everybody, you enter in an order through your terminal, trading terminal, through your broker. That order gets routed and executed electronically through one of the exchanges, auto matching engines, and your broker has a routing algorithm there. The exchanges have a routing algorithm, but all that happens electronically. It's handled, there's no human touch. It goes through you enter it in through your terminal, and then you get this, either you're executed or not executed. But that all happens electronically. Another way an order can get executed is through human touch, human involvement. You have a broker, and you could call a broker and ask your broker to, sometimes if you have an order, they'll call it shop it around, shop around and see if you could give me a better price. I don't want to send it in electronically, because either I want to try to negotiate and find somebody who's willing to give me a better price than I could get electronically, or you're looking for more liquidity because you want to put up a trade, and let's say you have 1,000 contracts, and to get 1,000 contracts, you might not be able to get it all from one counterparty. So, or you can get it from one counterparty, but that party is not displaying their best bid and offer. So broker, what would do is take that order, right, and say, okay, let me go shop around and call other interested, or potentially interested parties. It could be specialists, it could be market makers, it could be other large traders, and and by contacting them, right, and say, are you willing to, I have a buyer of 1,000 contracts. Would you be able to do all 1,000? Maybe they'll say, I can't do 1,000 there. That's too much, but I'm willing to do 200. Okay, well, now your broker has to go and find people willing to do the other 800. You might go to another broker and say, well, I have this order for 1,000. I found somebody to do 200. Are you willing to do any? So that's human touch, right? And once that order, the broker executes that order, he'll enter it in as a floor trade. So you see here that blue, that's floor trade. 30,393 contracts were involved in a floor trade, which implies that was executed with human touch. So that's this top part. So now we could go and look at the, let's say, breakdown of that activity or summaries activity by the different expirations, because this gives us some information, right, from a high level, how the people used options in Amazon, how they were executed. But what we know is that options, unlike stock, right, like, unlike a stock Amazon, these options will have different attributes, characteristics. So not all the options are the same. We have different expirations, we have different strikes besides calls and puts. So let's go and analyze it further, right? Well, what expirations are available to trade in Amazon? It's not like they're not it's not customizable to create an expiration, unless you do like a flex option. Then you do a flex option, you have to go out there and find a counterparty to do it. But when you trade options, they're standardized and they get listed on the exchange. You go to your broker machine and you say, well, what options are available, right? So these are the expirations that are available to trade. So you got August 9th, August 16th, August 23rd. These are the option expirations. You can see here, I don't know, we got whatever it is, 20 of them. So, and just for convenience, over here, this last column, this just shows you how many trading days are left prior to expiration. So you could see here, you don't have, this one is 5 trading days, the next one's 10, the next one's 15, 19. So obviously, you don't have expirations for every day of the year right now. There's no 2 days or 3 days or exactly 26 days. These are the ones that are available to trade. Now, they're available to trade. Are people using them? Are people trading these expirations? What are the implied vols look like? How are these options look like, the skew and so forth? So then we could go and analyze each of these different expirations. So this is the idea here. Now that we have all these expirations listed, let's get some important summary statistics, just like we did up here, to give us an idea what that expiration looks like, right? So let's first jump to, because we're talking about volume. Here's volume and open interest. So this is the breakdown of the volume by expiration. So all the volume by expiration, that's the breakdown right here. And here it shows you the percentage of the volume that traded in that expiration. Was there a concentration of volume in a particular expiration, right? That's what we're looking for. Is it evenly distributed? If we have 20 expirations, is it like, whatever, 5% of the volume in each expiration, or is it concentrated somewhere? And if it is, where along the term structure is it concentrated? So here we see that the 2 biggest expirations were August 9th, represented 32% of the volume, and August 16th, 35% of the volume almost. So this shows us the trading in Amazon looks like it is concentrated on those short dated options. Okay, very short dated options. The ones that expired August 9th, they're already done. Because August 9th expired on Friday. The next expiration that's available is August 16th to trade. So that represented 35% of the volume, 208,000 contracts. So that gives us kind of an indication how people are using, the options based on those maturities. And, the next one's like 10%. Let me just slide down here to see. Yeah, and then you could see it falls off by a big amount. So with the open interest, this here lets us know what the open interest was in the morning for each of those particular expirations. So we could just eyeball and see, where the open interest, we got one here, January 17th, 900,000. The next one looks like August 16th, 700,000 contracts. So that just gives us a breakdown of what the open interest looks like by expiration. If you click on it, right, I just clicked on that open interest on January 17th, right? That's over here. And here it shows us some more details about how that open interest is distributed. Because if we have open interest on January 17th, well, January 17th can have many different strikes. It has calls, it has puts, can have the strikes that are, at the money, out of the money. And so how is that open interest distributed within January 17th expiration. So this is, when I clicked on it, this here graph tells us couple things. It lists the different strikes. So you can see here strikes goes from, we have it from 45 to something like 300. So a lot of different strikes available in Amazon. Also, we have calls and puts. So calls are in the yellow bar, puts are the blue bar stacked on top of the yellow. In this way, we could look at the bar itself. If we stack it, right, the longest bar represents the most open interest in that expiration. So this longest bar over here says that the most open interest on the strike is the 50 strike. And the breakdown of that is 88% of it are in the 50 puts, 12% of the open interest is in the 50 call, 50 strike call. Okay. The other thing, just graphically, when we look at it, right, visually, we could see that as the strikes go up, then like when I go up, like as the strikes go higher, going this way, it seems like the open interest kind of starts to, decline, and it's mostly in call options, right? That's what we're seeing, that there's more yellow as you're going higher in strikes, as you're going lower in strikes, right? As we're going this way to the left, it looks like then most of the open interest are puts, right? Just visually, it looks like there's the blue is more dominant as you go down, the yellow is more dominant as you go up. And that's really quickly just eyeballing and getting that information, right? You could see 56% of all the open interest is in the puts, 44% in the calls. This here to the right, it's aggregating all the open interest in January 17th expiration and showing it over time. So the idea there is, well, here's what the open interest was June 28th. Here's where it was August 9th. Is open interest in that expiration, is it climbing, increasing? Is it decreasing? Is it staying the same, from day to day? Is there any unusual particular day where we see a big spike, either up or down in the call or put? And that's what this graph here is trying to show us. And here just looks like it's been pretty stable, maybe climbing a little bit. It looks like it's moving up slowly, over time, but not a great amount, because we don't see any like one so far from June 28th, starting June 28th, between then and now, we don't see anything like unusual where the open interest any particular day spiked up or down. And proportionally, the breakdown between the calls and the puts looks like it's been pretty stable in the last month, right? So that's the insights. If you click on this open interest over here, you'll get that bar. Same thing with if we click on the volume, right? So we click on the volume here, August 16th. Now I get this other breakdown. And Will, you know what? We're almost at 9:30. So I might just end it here and we could continue this tomorrow.
Awesome, D. Actually, that was helpful for the Santa who asked the questions. That's what he was looking for. So perfect. Just a reminder for everyone, we do have an interactive broker webinar tomorrow navigating, scanning for all things calendar spreads. IBKR, that means you have to go to the link I'm about to put out there and register on their site. You can either come in live or watch it at your convenience, but you have to do it through Interactive Brokers. So I will put that out there. Thanks everyone for joining. Great job as always, D.
Yep. Thanks everyone. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trading Peace Chameleons. Everyone have a great day. Bye.